We now get back to studio and start our conversation on matters cross-border payments. And with me in studio is Edward Nakitare. He is the KCB Senior Manager in charge of international money transfers. Thank you for joining us.
Thank you very much, Betty, for having me.
Karibu sana. Let's start with where cross-border payments is or are currently in the African region, please.
Okay, so I think maybe we take a step back and look at the history of cross-border payments and how we've gotten to where we are right now. I think trade, cross-border payments goes hand in hand with trade and remittances. Remittances here being, you know, a migrant who's not living in his country sending money back home. So what used to happen back in the days, we used to trade in cowrie shells. So, you know, imagine I give you cowrie shells for value of the items that you're giving me. And then we had barter trade. So barter trade, then cowrie shells. Then when we started getting into the banking sector, we got what you currently know as SWIFT, right? Which has become sort of an international standard for banking. And SWIFT was for a very long time one of the ways that a bank could send money from one country to the other. It has been a very fantastic service. It has its challenges. However, what we are looking at right now is more and more Africans are looking for instant, more affordable, I dare even say faster ways of sending money. And that's the landscape we find ourselves in right now, where the consumers or our customers are requesting or have challenged us to find solutions of sending money instantly cross-border. So that's where we are. We're in a phase where moving money cross-border is instant. Long are the days when we used to say it takes 2 to 3 days.
Right.
Now it's an instant service, and that's the reality we face ourselves in. Yeah.
Thank you for that. Now, just to put it into perspective, in 2022, cross-border remittances in Africa was at $100.1 billion. Right. $19.4 billion were intra-Africa, within, you know, Africa to African country. Right. Sub-Saharan Africa itself contributed $53 billion. That is over half. So that means it is a very big need, so to say, in the Sub-Saharan region where Kenya is. Right. We know that one of the big challenges is the cost of these cross-border payments. Please tell us why this is so. Why are the costs of sending money into Africa or outside of Africa very high? Well,
there's several reasons. I think the topmost one, for me, that I feel makes the cost of transfers at least very expensive is how many actors play in that whole ecosystem. Now, if you imagine who the customer, where the customer is hosted, or who owns the customer for that matter, right? So if it is a bank or it's a mobile wallet, you're looking at transfers going between maybe 3-4 hands before it gets to the ultimate beneficiary. And there are costs involved with moving these transfers, rightfully so, right? So the person who's originating the transaction or the entity that's originating the transaction will probably be linked with another entity in the middle, and then there's another entity before it gets to the ultimate beneficiary. So in that whole value chain, you find 3-4 actors, each has costs associated to it, and that is what causes the cost of transactions to go quite high. That's one. Number two, I think we are largely dependent on legacy systems. So systems that have been here for a very long time that perhaps do not boost efficiency in terms of how you process transactions. So those legacy systems have, to a great extent, influenced how much you know, the cost of transactions is or are for people moving money across, especially sub-Saharan Africa. Which is not the case when you look at other markets, like you put it. Other markets have more efficient ways of moving money. And I take you back to the instant. Every time the service is instant, it means you have less players who are playing in that whole ecosystem. It makes it much cheaper, maybe 2-3 partners at most in terms of that transaction. Yeah.
You've brought up the issue of legacy systems. Yeah. And of course, it's the new age, the digital age, you know, innovations are coming up. What do you think should be done to upgrade these systems? Isn't it just a matter of upgrading systems, or why is it taking so long? Let's say that.
Well, there has been significant investment in the legacy systems, rightfully so. To be able to support the quantum of business and customers that we have, that has obviously made it very expensive. And some of these legacy systems are designed for scale, not necessarily for efficiency, right? But for me, where I think why? You ask a very good question. Why have we not upgraded? I think maybe we should turn that question from why and what can we do about it, right? What can we do about it? And collaboration and partnerships are the most, the best way to go about it, because the reality of any position you find yourself in life is there will always be somebody else who does whatever it is you're doing faster, cheaper, more effective, right? So if you look at the onset of all these fintechs that are coming on board, providing quicker, easier, more efficient ways of doing it, instead of crashing them, instead of not supporting them, and in a way, we should look at collaborating with some of these efficient services that exist, new technologies that exist, not necessarily having to replace what we have, is just to build efficiency against collaboration. I think for me, that's the quickest way to go there, because if you say we have to do away with all the legacy systems, then there's a lot of work that goes into it, right? But you don't have to stop, then start. You can do it in tandem. And I think collaboration, for me, might be the quickest way to get us to where we need to go. Yeah.
And of course, a lot of fintechs have come up in this space.
Absolutely.
And they are bringing the costs down. But as you say, collaboration is very important. You sit in the banking sector. Are banks collaborating?
Absolutely. And allow me to speak about KCB and what we do is, so we have an entire unit that just focuses on fintech partnerships, right? Majority of even the businesses that we support from across border payments are fintechs. So fintechs have taken that forefront in terms of identifying the need that was there. Needs such as, how do we reduce the cost of remittances, for example? How do we make movement and payments easier and quicker, right, and cheaper? And they have low operating costs compared to, the likes of banks, right? And as such, they're able to develop solutions that are much faster, quicker, and easier. And I dare even say scalable, right? Because scalability, I think, for us as a bank is very important, because looking at a customer base of 33 million customers, you need to be able to have something that is able to manage these customers and provide services to each and every customer, still maintaining whatever your value proposition is. So if it is efficiency, then it should be able to do that for 33 million customers plus.
Right.
Yeah.
Let's talk about when you're doing cross-border payments, there's the issue of security.
Yeah.
These are digital platforms.
Yeah.
We know that cyber attacks or cyber threats, so to say, have been on the rise. For Kenya specifically, they shot up in 2024. And the government and private sector has been working towards ensuring that we are improving our cyber security. From a cross-border payments perspective, how safe are these transactions?
Now, security is very, very important, especially when looking at cross-border payments. Yeah. Why? Because money is very emotive, right? So behind every remittance that's being sent, there's something that it's going to do. It's either supporting friends and family, or paying for a bill or service, something of that sort. So from a security perspective, I think from where we sit as a bank, one of the key things that we have to ensure is that whatever platform you're using has to be secure as per bank standards. And I think if it doesn't pass bank standards, then it's not worth your time, isn't it? Right? So we have, for most banks, even from a regulatory standpoint, is to ensure that the systems that are being used are secure first and foremost, have been taken through rigorous testing from a security perspective. And just even over and above that is, for every transaction that's being processed cross-border, are you able to screen that transaction against, the money laundering list, for example, or counter-terrorist financing? And that's one of the requirements that we have. So if you're doing a cross-border transaction, then you need to be able to demonstrate that you have enough systems in place, first, to secure that transaction, and number two, to screen against any, possible, lists that exist out there for money laundering and counter-terrorism financing. Yeah.
They say that systems are only as strong as the people using those systems.
True.
What else do you do in terms of ensuring that your people are ready to use these systems and securely, so to say?
So again, as a bank, what we do is, so we educate our customers, right? So I think everyone has found, every once in a while, you found a message telling you, keep safe, your PIN is your password, keep it safe, et cetera, et cetera. And one of the things that we realize is you can have the knowledge in terms of, I need to be secure, but sometimes it's very easy for even the best of us to be duped, right? So one of the things that we are actively doing is educating our customers. So we spend lots of communication just telling our customers how to stay safe online. We train our colleagues, our staff on knowing exactly what it means to stay safe, right? From an online perspective, because many a time we take for granted how easy it is to log into, say, your mobile banking app and do a transaction, right? Mm-hmm. But the levels of security that go behind or are behind to ensure that no funny characters are trying to intercept those messages that are being passed across. So it is important, for one, our staff to be educated, which we do on a quarterly basis, to ensure they're up to speed in terms of what are some of the new threats that exist out there. And then secondly, to our customers. Even from a fraud perspective, when you walk into any branch, you'll find fraud posters, and then there'll be forums talking to our customers about how to stay safe, right? So you can't be 100% safe, but if you're aware, then you know how to identify potential threats. Mm-hmm. Yeah.
Let's stay right there just a little bit for the sake of our viewers. We know that there are instances where people have lost money. So what would you tell someone in terms of the specifics of keeping their money safe when they're making a transaction, whether it's locally or internationally?
So I think the major thing, so there's two ways where people things can go wrong, right? Mm-hmm. So the first is when it's a fraudulent transaction, when you're being duped by the end recipient, right? And second is how you access your devices or how you access your money, right? Mm-hmm. So on the first bit, I think just being vigilant. If something sounds too good to be true, more often than not, it's not. You know what I mean? So just being vigilant in terms of if you're sending money, what channels are you using? Are you using, for example, reputable channels? And there's always easy ways to verify some of this information. For example, if you wanted to know whether a service has been licensed and regulated, first and foremost, any entity that is doing cross-border transfers needs to be licensed and regulated by a credible regulator, right? And most of these regulators will have listed some of the services on their websites, right? So if you're in doubt, just do a quick Google search, go to the respective regulatory body, search for that company. If it's not there, then maybe think twice about it. Secondly, so that's in terms of of the entities that you're using. And speaking about how customers lose money, and it's simple things like if you are logging into, say, your banking app, for example, use, say, mobile data as opposed to a public Wi-Fi, right? Those are very easy ones to because on a public Wi-Fi, you don't know who's watching, right? Many people could be watching. And therein could lie, very many threats in terms of being able to lose money. So rule of thumb, if you're logging into your banking, for example, banking apps, use a secure network, so use mobile internet banking or a Wi-Fi network that and trust. Mostly public Wi-Fis, because they're public, anybody can be on the network, and that can make it easy for you for something bad to happen. The other thing is, as soon as you're done processing your payment, log out from the session. Don't leave the session on. Now, many a times, as with most apps, is your idea of being done with that app is just exiting. It's not logging out, it's just exiting. Yeah. So for what we encourage our customers is when you're on your app, you're done with your transaction, actually log out. Don't just leave the app and assume, that it's logged off. But banks do have, such as KCB, we've put measures in place to ensure that if there's no activity on your app, we actually log you out, right? Okay. But the rule of thumb should be, as soon as you're done transacting, log off. Don't use public Wi-Fis. Mm-hmm. Yeah.
I think, a lot of us, we just get off the app. It's still running in the background, but so that when you get into public Wi-Fi, the hackers do their thing.
Exactly.
Okay, that's very interesting. Now, we know that the demand is increasing for cross-border payments. And there's the gig economy. Young people are doing remote jobs and they're being paid in dollars from various countries. So what is the future looking like for players in this space of cross-border payments?
So I think what people need to understand, or any financial institution needs to understand, is that we need to innovate as quickly as our customers are, if not faster, right? So if our customers are seeking better opportunities cross-border, then you need to find and have a plan for a cross-border transfer space. Remember, part of our mandate as banks is to ensure that our customers are able to send and receive funds, whether domestic or globally, right? If you have money in your account, those funds need to do something, right? So those funds will either do an investment, they'll either pay, they'll either invest, etc., etc. So what we are seeing, at least in our space, is more and more of the younger generation is looking for opportunities outside the country. Not necessarily having to leave the country, but looking for opportunities outside the country. Because we have very skilled populace, very skilled young populace who are selling their services globally. Now, as financial institutions, the biggest challenge or the biggest ask that we've gotten from our customers is, how do I get paid and get the money into my account right now? We're in the right now generation, yes. Right? And I think that's the theme that we are seeing, at least from a cross-border payment space. Before, it used to be, you should be able to get money, right? And it ended at that. How you get it is neither here nor there. Now it's, I need to get my money now. I need to get my money in different mediums. So it's not just being able to, say, walk into a location and collect cash. I need to be able to have that money sitting in my mobile wallet. I need to have that money sitting in my my bank account. So how do you enable this this new gig economy, or this new segment of customers to be able to receive and send money? Because the reality is, as much as we are also receiving money, we have a lot of Kenyans who are doing businesses outside, right? And there are many reliable ways that they send, say, their goods and issue their services globally. So how do they pay, right? How do they pay for their services, for example? Are you still subjecting them to the old ways of sending, where, you know, you send, they have no visibility over how long that transaction will take or where that transaction is what are you doing as a financial institution to enable this customer have full transparency when they're pushing a transaction, and of course at a cost-effective way. Yeah. I
think the beauty of customers having demand is that there will be competition. You know, someone will come up with a solution to rival what already exists, and that is very good for the consumer. Yes. From a regulatory perspective, policy and regulatory perspective, how do you think the African continent is doing?
I think we've taken great strides. And great strides, I mean, if you look at, just follow what is happening with how many fintechs are just mushrooming, right? So I'm very passionate about fintechs, right? So I'll speak about the whole fintech space and what's happening there. You tend to see, you know, a lot of things happening, say, in Nigeria, in Egypt, Kenya, South Africa, and everywhere where money is involved, then you need to have a policy in place, right? You need to have somebody who's policing or somebody who has oversight of what is happening. So I think in the past, say, five or so years, the regulators have really stepped up in terms of keeping up with this growing need of fintechs and solving solutions. So much so that, like, you see even in Kenya, so there's a whole department in central bank that just focuses on payment systems and fintechs and the like, just to be able to guide policy and regulation on that bit. And that's the same case you find in countries like Nigeria and Egypt. And more regulators across the continent are seeing the need to have these things in place, because, as I said, if you don't adapt as quickly as you can, guess what? Guys will find other ways to do it. And especially where money is involved, I think it's very important. And regulators have understood this, and they're doing quite a lot in terms of getting us to where we need to be. So making it even easy, for example, and there have been discussions, the other day I saw those discussion around the EAC South African community in terms of harmonizing how we do cross-border payments, as well as just harmonizing some of the policies we have from a regulatory standpoint for licensing. And that's a step in the right direction. So you can imagine this is not just happening here, it's also happening so in West Africa, it's happening in North Africa, and the hope and the desire is one day to have one unified one as an African continent, isn't it? But yeah, we're not there yet, but I think we're making steps in the right direction. Yeah.
When you speak of fintechs, the startup industry is very vibrant in Kenya, and I think over 80% is fintech.
Yeah.
So that's pretty big. So from what you've said, you work in the Kenyan context or the East African context, so to say. What more can be done?
I think banks are well suited to support fintechs, right? So in itself, for the case of our viewers, fintech is financial technology, right?
Yes.
And traditionally, and if you look at most economies, even how our economy is set up, banks are still central to the whole financial institution or the financial services sector. And I think what needs to change, or what we need to do, is we need to have more banks coming in to support these fintechs, right? And I'll give you a very easy interpretation of why I say this. Is imagine a fintech that needs to provide a solution for paying of school fees, for example. Say you've had a very rudimentary way of paying school fees. Maybe you walk to a branch, you deposit money, but you don't have time, right, to walk into a branch, for example, and do this. And then here comes a fintech that tells you, I'm providing you a very easy way of having repeat payments directly to the school, right? Guess what? That school has an account with a bank, doesn't it? Now, the bank would either choose to not support this fintech in offering this service and decide I'm going to go and just do it myself, or they could choose to collaborate and provide services, open APIs for the fintech to be able to say debit or credit directly to that account or directly from your bank account. I think those are some of the things that just banks deliberately need to focus on, right? So start looking at the fintech as a normal customer. So not just segmenting them as competition, but looking at them as a customer who needs a service that the bank can provide. And also collaborate with them.
Right. And now from a fintech perspective, you said you work with a lot of them.
Yeah.
What are you seeing from that end?
So a lot of fintechs are actually crossing over to the cross-border space, and payments and cross-border. I think especially on the e-commerce side, I think I can name numerous fintechs that have come into the bank and they're looking for us to support them, in APIs that allow them, say, to debit bank accounts or validate transactions, etc., etc. And the reason I know I've seen it, is there's a direct correlation between an entrepreneur spirit in terms of what a lot of the young people are doing in terms of getting small businesses, right? So a lot of businesses are coming up. And maybe I can even pose this question to you. When's the last time you actually physically walked to a shop to buy an item? Very few times, isn't it?
Yeah.
Majority of the time, you're on social media, you're online, you're on a website, you're looking for items. Now, a lot of fintechs are powering these small businesses. Again, it's based on need. So a lot of businesses are going online, they're going digital, in terms of they don't need to have physical stores. In fact, most of the places I buy my items are online. They don't even have a physical store. I don't even know who runs these pages or who runs these things. I don't have a face to it.
Right.
But every other month, I'm purchasing something from them. And every other time, with every new, say, business that's coming on board, there's a fintech behind it that's powering that payment, right? Whether I'm paying via mobile money or I'm doing a direct bank debit, there's a fintech that's providing that service. So I guess, does that answer your question?
It does, indeed it does. Thank you very much. I'm speaking with Edward Nakitare, who is the Senior Manager in charge of International Money Transfers at Kenya Commercial Bank, KCB. And we are talking about matters cross-border payments and how the space is looking like, the importance of fintechs in this space, as well as bringing the costs down. Are ongoing, of course. As I told you, we shall be keeping tabs on that in the middle of our programs. We get back in studio and continue with our conversation on cross-border payments with Edward Nakitare, who is the KCB Senior Manager in charge of International Money Transfers. Thank you for staying with us.
Thank you very much.
Now, the Pan-African Payment and Settlement System, what is it and how is it helping this cross-border payment space?
So the Pan-African Payment and Settlement System is an infrastructure that was built to support African payments. As it says, Pan-African. One of the things, part of the African Continental Free Trade Area was how do you move money, right? So as you do trade, you should be able to move money. And so PAPS came in to provide that solution. So PAPS in itself was constituted by the African Export and Import Bank. And one of the tenets of PAPS is to be able to push or transfer money instantly, right? And whilst at it, allow users on the network to send money within or using their local currencies. So let me give you an example. Assuming a Kenyan is doing trade with somebody in Ghana, Accra. So I'm buying Kente. Ideally, the whole idea behind PAPS is to enable this trader to be able to get an invoice in Ghanaian cedis and pay it in Kenya shillings, relieving the pressure of having to look for USDs or foreign currencies to be able to support that payment. And so as KCB, we are the first bank in East Africa to join the PAP network. So PAPS it's a network of banks. So banks join onto the network. Countries and banks join onto the network. And KCB is the first bank in East Africa to do that. And the whole idea behind it is to be able to support our customers to do trade within the region or within Africa. Yeah.
And of course, we know that trade is only going to increase now that experts are saying that Africa needs to look inward. There is the AFCFTA, the free trade area that wants to ensure that we are tapping the African population and that market that it provides. So when you look now forward, what are you looking to see in this space as we come to a close of the conversation?
So I love that question. One of the exciting things that I hope to see is the overdependence that we've had on foreign solutions for moving money across Africa. As we look inward, I think there's a lot of business that can be done. There's a lot of trade that can be done within Africa, right? If you imagine how big the continent is, and if you're on social media and you by chance happened to find yourself on, say, feeds from another country, say Nigeria or Ghana or wherever, you see a vibrant society. You see people doing amazing things, right? People looking at, let me give you an example, very practical example, at least for the East African perspective, just to see how Africa is. I like to grill, right? And I've been looking for a good grill, to be able to do my grilling. And I found this company. It's a small entrepreneur in Tanzania who does the most amazing grills, like everything you'd want in a high-end grill at a fraction of the cost, right? So imagine a trader like that, and then expand that to have traders everywhere else, right? So you have a trader maybe in Morocco, you have a trader in Zambia, you have a trader somewhere else who has such a unique product that has a way better comparative advantage in terms of building it in their country compared to here. If I needed that item, I need to find a way to pay for that item for them to shipping. We've done a good job of figuring out how to move things around. Like if you wanted to move things around within Africa, it's not the hardest thing to do, right? Granted, it has its challenges, but there is a way for you to move it around. But then how do you pay for that item, right? So now PAPS comes in to solve some of these problems, right? So if this guy tells me I'm selling this item for say 4,000 Tanzanian shillings, I should be able to pay him, right? I shouldn't have to go look for dollars to pay for the service.
Right.
Same thing if a guy is sitting in Zambia and he's selling me something, or vice versa, somebody is getting something from Kenya, the Kenyan should be able to receive money directly to their account, because you need the Kenya shillings. Tomorrow when you walk out, you're going to pay for something in Kenya shillings. The other guy will pay in his local currency, right? So it being an instant service and being able to pay in your local currency, that is a game changer. And then secondly is being able to package PAPS for not just for the banks as a financial institution, and KCB is doing this, is to enable open APIs so that customers can actually consume them. So if a fintech is doing business cross-border, how do we give you this APIs on PAPS so that you're able to push money back and forth? So quite excited about what's coming next and what PAPS is going to do, and the markets that PAPS is going to open up for a lot of our customers as KCB.
Right. Yeah. Thank you very much, Edward, for sharing your thoughts. Of course, we are looking forward to all those innovations coming up in the cross-border payment space.
Absolutely.
Asante sana. I have been speaking with Edward Nakitare. He is KCB's Senior Manager in charge of international money transfers, talking about cross-border payments, and of course things are looking up. More innovations are coming up. Fintech and banking sector, of course, doing a lot of collaboration in that space, and hopefully there will be no need to be sending dollars to pay for Zambian goods. You can just send the Zambian kwacha. Well, that is it for that conversation. I would like to now join my colleague in Kisumu